Imagine watching a promising crypto project take a massive hit, not because of a market crash, but due to failing to meet the rigorous standards of one of the world's biggest exchanges. Today, we unravel the intriguing saga of PiCoin and its second rejection by Binance. What does this mean for its value and future in the crypto realm? Stay tuned as we uncover every detail. Hey there, crypto aficionados and future shapers. Welcome back to TJ Crypto World Channel, your go-to hub for the most incisive analyses and bold predictions in the crypto space. I'm your host, Your Name, and today we're diving headfirst into the latest developments on the Binance rejection. We're going to dissect every angle, the underlying issues behind this decision, its ripple effects on the Pi token price, and the technical signals that might hint at what comes next for this controversial crypto project. Before we jump in, here's a quick teaser. We'll explore how Binance's strict criteria have exposed serious regulatory and decentralization concerns with Bitcoin, and we'll even break down the technical charts to reveal why the token's price is tumbling. Trust me, you'll want to stick around until the very end for an in-depth look at whether PiCoin might retrace its losses or plunge further. And if you're as passionate about crypto as we are, make sure to smash that like button and subscribe to the channel. You won't want to miss our upcoming insights. Let's set the stage. Binance, the crypto giant known for its rigorous listing procedures, recently decided to exclude PiCoin from its vote to list process for the second consecutive cycle. This isn't just a minor setback, it's a stark indicator of deep-rooted issues that could jeopardize PiCoin's prospects for mainstream exchange integration and long-term value stability. Unpacking the rejection, the regulatory and decentralization dilemma at the core of this decision lies a labyrinth of regulatory challenges. Binance's rejection stems from a litany of concerns: regulatory transparency. Unlike other tokens that boast clear compliance strategies and robust regulatory certifications, PiCoin remains in a murky zone. Its current framework does not offer the transparency or assurance required by top-tier exchanges. Centralized governance. While many cryptocurrencies thrive on decentralization, PiCoin's governance structure is heavily centralized. The Pi core team exerts tight control over development and network operations, a stark contrast to the distributed decision-making models that major exchanges favor. Mainnet limitations. Additionally, PiCoin's restrictive mainnet access and its reliance on external blockchain verification tools have raised alarms. These tools are crucial for verifying liquidity and decentralization, two pillars that Binance and other exchanges rely on to assess a project's viability. This confluence of factors led Binance to rule against PiCoin, marking a significant blow to the token's ambitions for broader adoption. Each rejection further chips away at the trust of its supporters, casting doubt over its future value and mainstream appeal. Market reaction. The Pi token price tumbled. The immediate aftermath of the Binance rejection was brutal for PiCoin's market price. Following the news, Pi experienced a dramatic drop, its value plummeting to a new market low. For context, the token recently fell to $0.7012, only to dip further to $0.6260, erasing a significant portion of its market capitalization. What exactly triggered such a steep decline? It's the convergence of multiple market factors. Investor confidence. The repeated rejections by Binance have eroded investor confidence. Without the backing of one of the world's most reputable exchanges, the market perceives PiCoin as a high-risk asset. And adoption challenges. With the absence of major exchange support, PiCoin is facing severe liquidity constraints. This scarcity makes it challenging for holders to convert their tokens into other assets, further dampening user adoption. Technical signals. Diving into the charts, we see that technical indicators have been sending out bearish signals. For instance, a persistent failure to break above the critical 70 cents resistance level and a decline below the 65 cents support zone signal that the market remains in a state of distress. Technical analysis. Decoding the charts. Let's shift our focus to the technical side of things. The recent price action of PiCoin has been a roller coaster, with clear signs of market weakness. RSI and MACD analysis. The Relative Strength Index, RSI, is showing that selling pressure still dominates, remaining below the 30-mark threshold. Coupled with the MACD's recent death cross where the short-term moving average crosses below the long-term average, these indicators collectively point to a bearish trend. The previous golden cross that once hinted at bullish momentum has now been overshadowed by these negative signals. Support and resistance levels. The key support for PiCoin currently hovers between 62 cents and $0.625. Should this floor fail to hold, the token could spiral further downward. Conversely, a recovery would necessitate breaking through the primary resistance level at 65 cents, a challenging feat given the current market sentiment. Investors and traders are closely monitoring these technical markers, as they provide vital clues on whether PiCoin can reclaim lost ground or if it's set for a prolonged free fall. The broader implications, trust, transparency, and the future beyond the numbers. The Binance rejection carries broader implications for the crypto ecosystem. It underscores a critical junction where regulatory compliance, technological innovation, and decentralized governance converge. For PiCoin, this is a wake-up call to overhaul its current strategies, embracing decentralization. To win back market trust, PiCoin must transition from its centralized governance model. Embracing a more decentralized structure could not only improve its compliance with exchange standards but also align with the ethos of the broader crypto community. Enhancing transparency, the project's leadership must prioritize transparency by adopting robust verification methods and obtaining the necessary regulatory certifications. Without these measures, the token's journey to mainstream adoption will remain fraught with uncertainty. Long-term viability, the road ahead for PiCoin is riddled with challenges. With market participants increasingly favoring projects that demonstrate clear compliance and decentralization, Pi's future hinges on its ability to adapt and evolve. If you're finding this deep dive into PiCoin's challenges as riveting as I am, please take a moment to hit that like button and subscribe to TJ Crypto World channel. Your support is what fuels our relentless pursuit of the latest, most insightful crypto news. And don't forget to ring the notification bell. Trust me, you won't want to miss our next update on this unfolding story. What's next for PiCoin? Retrace or freefall? Now, let's speculate on what the future might hold for PiCoin. The repeated setbacks with Binance have left many wondering, will the token eventually retrace its losses, or are we witnessing the beginning of a prolonged freefall? Here's what we need to watch: market recovery signals. There are signs that the current selling pressure may soon wane. The RSI is hinting at potential exhaustion of bearish momentum. Should the market find a firmer support base around the 62 cents level, a bounce back toward 65 cents could be on the horizon. Reversal patterns. The emergence of any bullish reversal patterns in the charts could signal a turnaround. However, until such patterns clearly materialize, caution is warranted. Catalytic announcements. Any significant upgrades from the PiCoin team, especially those addressing decentralization and regulatory transparency, could act as catalysts to restore investor confidence. It's these announcements, coupled with improved technical indicators, that will ultimately determine whether PiCoin can regain its footing. Looking ahead, the evolution of exchange standards. The Binance saga also raises important questions about how exchanges assess and integrate emerging crypto projects. In a rapidly evolving landscape, platforms like Binance are under constant pressure to uphold strict standards that ensure market stability and regulatory compliance. For projects that do not meet these benchmarks, repeated rejections might become the norm until they align more closely with decentralized principles and transparent operational practices. This scenario is a stark reminder that innovation in the crypto space must be balanced with robust governance and clear regulatory frameworks. As investors, we're not just looking at price movements, we're examining the underlying integrity and sustainability of these projects. As we wrap up today's deep dive, I want to extend my sincere appreciation for your time and attention. The case of PiCoin's Binance rejection is more than just a market story. It's a reflection of the challenges facing the entire crypto ecosystem as it strives to balance innovation with accountability. If today's analysis sparked your curiosity and you're eager to see how these developments evolve, please hit that like button and subscribe to TJ Crypto World channel. Your engagement and feedback are invaluable in helping us bring you the most comprehensive and thought-provoking crypto insights available. Before you go, I invite you to check out our other videos, where we explore everything from blockchain breakthroughs to the latest trends in decentralized finance. Each video is designed to empower you with the knowledge you need to navigate this dynamic world of crypto. Thank you once again for joining me on this journey. I'm your name, and it's been a pleasure breaking down the complexities of the Binance rejection with you. And stay informed, and together, let's shape the future of finance here on TJ Crypto World channel. Until next time, Keep your strategies sharp and your curiosity alive. Don't forget to leave your thoughts in the comments below. Let's spark a discussion and explore the future of crypto together. 03 Many.